Welcome, everyone, to another exciting episode of the YouTube show and podcast, None of Our Businesses, where that's me, Ty Carr, and with me today is Tammy Hess.
Hi.
And Charlie Zygmunt.
Hi.
And we talk about the week's topics, the week's news in business, finance, taxes, other kinds of business news, or none of those things, just things that come up in our world that we want to talk about. But what we always do is talk about it from the perspective of us three as accountants. So here's what we're going to be getting into today. Brand blunders, situations where the brand message doesn't come across quite as intended. Phishing scheme for tax pros. Crypto at the Super Bowl. Organizational best practices from accounting today. And finally, wait till you hear the money spent on security at restaurants. All right, well, let's kick it off. I'll shove it over here to Charlie to get us started.
So I've got an article we can talk about today from Wikipedia, and which is, a little bit of a questionable source, but I thought it was a fun article. So it's called Brand Blunder. And so what a brand blunder is, according to the article, is it's an error associated with the branding of a product, especially a new product in a new market. Reasons for such slip-ups include the lack of understanding of the language, culture, and consumer attitudes in the new market. And so we've all kind of heard some stories about stuff like this, but it gives some good examples that I thought were a little humorous. And so there's a French aluminum foil that failed called Alu Fanny. There was a French breakfast cereal called Crapsy Fruit, a Portuguese brand of tinned tuna called Atom Bomb, a Japanese sports drink called Pocari Sweat, and then one of my favorites was Barfi, a brand of frozen hamburgers in Argentina. And so these are all products they tried to bring into market and they failed miserably. And then there were some others that it mentions that I thought were a little more interesting. Talked about how in April of 2002, there was a Starbucks ad that had like these two twin cups of Tazo tea. And then they had like a dragonfly that was like airborne and flying into the two cups. And the caption that they chose for that was collapse into cool. And so as you can imagine, it caused quite a big uprising. And so I thought it was interesting because I think on the one hand, some of these are kind of more basic translation type issues, but then some of them are a little bit more involved in terms of how a company might go about avoiding issues like this. So I wondered if you guys had any advice for companies that are maybe looking to expand internationally or just looking to come up with new product names about how they might approach a problem like this.
Yeah, I thought that was an interesting article because I think that the kind of negative point of view is if you do make a blunder like this, it's really hard to unwind and kind of recover from, and sometimes you don't get a second chance. So my recommendation for companies is to really take a look and do market surveys, consumer surveys. I kind of see how you're going to land in the marketplace, not only where you are currently, but you have to think big to say, this may work in my local area. If I decide to use this name that's really comical or humorous or really, ties to this particular area. But if I do want to go nationally or globally, is that going to still have the same feel, to other places? So you kind of have to do some research on that beforehand and think about not just for here's what's going to happen today, but what are you aspiring to grow to? Because that's where you find some of those big blunders. Is it works great locally, but then when you take it overseas or somewhere else, it doesn't land well. What do you think, Ty?
Yeah, I think it's an example of how globalization and I'm trying to think of other examples of this kind of scenario, but I guess what I'm thinking is it's an example of how small businesses and even, I don't know how small some of these businesses are. Actually, some of them that you mentioned aren't that small, but it's an example of how business can do something like go global easier, the logistics to go global, to like bring the product physically to the marketplace in another country is actually easier than actually having a global strategy. I guess, let me put it that way. So I think that, and I guess what's in my mind about that point is that, decades ago, the cost or the effort it would take to actually just make your product available in another country was high enough that you wouldn't do that without like some thought into how you're going to do that, right? Like you wouldn't just put a product on the shelf in a foreign jurisdiction without doing a market study, a survey of, and so some of these issues would have gotten figured out, whether it's translation or just a lack of cultural awareness. You would have done more work to like figure out, well, what is going to resonate with this particular population, and how are we going to best position this product in this area in order to grow, right? But I think that the cost, the overall investment necessary to just simply get the product on the shelf has come down so much that it has led to people kind of shooting first and then aiming later, right? And I think that, and I know there's other examples of business that aren't about globalization or products like that, where the costs of doing certain things kind of aligned with the fact that you need to think more strategically about doing those things. And over time, infrastructure costs and logistics costs have improved to such a great extent that you can do a lot of stuff without thinking too hard, but that doesn't mean you should. And I think that's what we're seeing here. The issue is, companies that are just taking a shotgun approach to getting their products out places without putting a lot of thought into the strategy behind putting their products in those places.
I think that's a really good point, because there's been so many things that have made it easier to just get ideas out there and get products to market. So I think that's really interesting, and it'll be fun to see. It's always fun to see kind of what the different problems are for these businesses. So we'll look to see the brand blunder list expanded as time goes on. Do you have another article we can, Tammy?
Yeah, so I have one from Accounting Today that shares a new phishing scheme that appears to be targeting tax professionals. According to the article, the IRS and the Security Summit issued a warning regarding a new phishing email that uses the IRS logo and asks for information regarding a tax preparer's account's credentials, which would allow the scammers to file fake returns. The article also references similar phishing emails that include, the malicious links or attachments that, if downloaded, will download the malware on the recipient's computer. The article shares an example of such an email that was provided by the IRS that really does give a sense to what you should be looking out for. And the article recommends sending the email to phishing@irs.gov and notifying the Treasurer Inspector General for Tax Administration. And I thought this was an important article to share because email schemes have, evolved over the years, and they can be quite disruptive to a company and costly. In many cases, they're easy to identify, and most people delete them without ever even opening them. And we also rely on spam filters to prevent phishing emails to come through. The challenge, however, is that there are some that still make it through and that are actually acted upon. And so I thought I would share a story that a few years ago, a company I was working with had an email that came through to the accounts payable clerk that it looked like it was sent from the owner and it was requesting a wire transfer. The recipient thought it was legit, and since it was directly from the owner, they quickly proceeded in preparing the wire request. Luckily, there were other controls in place that required a review and approval of that transaction, so it didn't go, much further than that. And in this case, while it appeared to be an email from the owner, it was out of the norm for the owner to make such a request to the AP clerk. There were spelling errors galore, and even the signature was incorrect. The owner went by a nickname, and they used the full proper name of the owner. And if the person actually double clicked on the sender's name, it would have shown that the email was not the owner's email. The lesson that we learned from this experience was to be more skeptical, take a moment to look at the actual email address and communicate when those types of emails come through so that others could be on the lookout for it as well. And because what we had discovered was that several employees had received that same email. Some of them ignored it and some of it forwarded saying, oh, this must have been meant for you. Go ahead and proceed. So I thought I would, kick it to the group to say, what are some of the ones that you've seen and how can people and companies protect themselves from such schemes?
Yeah, I think for a lot of businesses, particularly those that maybe have a lot of cash flow, and I don't know how the scammers seem to get onto this, but it seems like businesses that you can, particularly businesses in the venture-backed space where they get a lot of cash flow through investment. It's very common for the people in these companies to get emails that are, posing as an executive or posing as somebody on the board or something like that, saying, hey, I need you to wire money to this account today, and, stuff like that. And so, it's a scary thing to think about, those kinds of things, but it is pretty common. I think, it's a reminder for small businesses in particular to be vigilant, because I think that it's easy to kind of think about as a small business that you might be somewhat protected by the herd, in the sense that you're a little more invisible, not as much of a target. Why would a scammer go after you? Because, you're not a big target, and you're not likely to have a lot of funds. And I wish that were the case. But the thing is that, this article that you're bringing up about scammers that are targeting tax preparers, if you think about the vast majority of tax preparers and tax preparation firms in this country, most of them are very small businesses. And so it's disheartening to hear that there's a scheme that is going after a small business community like that, because they don't have a lot of resources to deal with it. If they do incur losses like that, it could do their business end to incur a loss on something like that, or to have to have any kind of issue like that. And so I think that if like many small businesses out there, you think, well, it's unlikely that I'm going to have to deal with this because, I'm small potatoes. Why would anyone target me? I think this highlights the fact that, they are actively going after certain targets, and you, just because you're a small business, that doesn't make it unlikely that you could face something like this. So I think keeping vigilant about it is always important.
Echo a lot of what you're saying here, but I think that's exactly right. And I just want to say I've seen a lot of these attempts in the clients that I've worked with come through on email, and received kind of training from them about what their procedures are when this happens. And so they're always big about getting it to the IT team and that kind of a thing. And the other thing they made a big point about is that in light of this happening, they've become more and more okay with phone call verifications. They basically said, if you're ever not sure about anything, just get the guy on the phone, even if you think it's going to take some time, because we're just afraid of this and we've seen it happening. They have some other tips about looking at the domains that are coming in. So when you check into when you get an email that you don't recognize, make sure to check that it's coming from an actual source that you expect it to. And then I think there are some things that businesses can do in terms of document matching. They're basically making sure that everything links back to an invoice that is for a product that they're actually getting. And also segregation of duties in terms of trying to get multiple parties on the approval. But as you mentioned, Ty, I think a lot of it is the exposure isn't just the money that you have as a business, it's the information that you have, or the authority that you have in some ways. If as a tax preparer, they can submit fraudulent returns to obtain refunds, then suddenly it's not about how much money that guy has in the bank, it's about how many different accounts could get debited through this tax preparer's authorizations, really. And so it's just kind of a really pervasive problem that I think will continue getting worse. It really amazes me about the spelling errors. I would have thought that this as a issue, they would have, evolved beyond that. But I guess that's, lucky that that's happening, because it makes them easier to weed out these requests. But those are my thoughts.
Yeah, I think those are all good thoughts. And the other one I would like just to reemphasize on is, if it is out of the norm, just double check. I think that's the biggest thing, because sometimes it could be weird about a wire request or that, but there's also been times where they're like, can you purchase this and I'll go pick it up? And so you go ahead and you on a credit card, you make a purchase, and then that a person comes and picks it up, and it's not a valid type of purchase. But if it is just outside the norm, I like that what you said, Charlie. Call the person and just say, hey, I got your email. Did you really mean for me to do this? Because some they're like, oh no, they don't. And one of the things too, a different story that I won't go into details to, but I'll tell you what the impact was. One of these phishing emails cost the company $60,000 over a few days, just because someone thought it was a legit email, and the company was out money. And so you have to be careful on those things. So really take a good look at those emails, the email address and domains, all that kind of stuff. And if it is something that's not, that just seems a little bit weird or unique, just go ahead and double check before you do that. And so Ty, you have our next article.
Yeah, the article I'm going to be talking about gets into kind of maybe a random mishmash of thoughts that I have. The article was about, on the surface, was simply about crypto and Super Bowl ads. And, the key point of the article, seems to be, if you kind of just look at it, is okay, well, the, crypto won the race in terms of getting a good return on the Super Bowl ads in terms of measuring with software companies how many app downloads occurred as a result of Super Bowl ads. And so what this study was showing was that Coinbase and other crypto currency related apps were in the top 5 of increased app downloads as a result of the Super Bowl ads. But I think if you think about, what is the main point of that advertising, and particularly advertising the Super Bowl, works. I mean, yeah, great. I think of course it does. I think the more subtext or the interesting piece of is maybe not, the authors didn't really get into this or spell it out, but I think it's kind of the more, asking the questions about, Super Bowl ads you would think are often meant on a B2C basis, business to consumer, business to everyday Joe, everyday Jane, trying to kind of inspire consumers to buy their goods, their wares, their services, right? So it's interesting that an investment, what people purport as an investment would be so heavily advertised in that arena, right? And then, you don't see, yeah, and then another kind of would reveal my biases, but another interesting kind of facet of that article, which I don't think was necessarily a coincidence in terms of the authors of the article, was that one of the other in the top 10 of app downloads was a sports betting website or company app platform type of thing, right? And so I think in thinking about, bringing together some of my random thoughts on this point, is I hadn't thought a whole lot. I mean, I don't get into investments of this kind, generally speaking, but I hadn't thought too much about it lately, but I've been reading and hearing a lot of discussion about it, particularly because crypto values had decreased lately. So it became a big kind of discussion point, right? But then if you go back before the decrease, there was plenty of discussion from people like, the 2 old guys that I love listening to on it are Charlie Munger and Warren Buffett. But then you also, our colleagues at the Cloud Accounting Podcast, they've been talking a lot about their beliefs about crypto, and yeah. So I guess my overall thought on this point is that I'll reveal my biases to our audience and just say that crypto. I mean, be careful when you're thinking of yourself as an investor. I mean, there's a difference between being a speculator and an investor. And an investor, I think of investors as being like the Charlie Mungers and Warren Buffetts of the world, right? And investors invest in assets that are income generating. They invest in things that have the potential or that are going to generate cash flows or income. That's business investing, right? Non-business investing, which is more like speculating, is putting your money in things that you think of as a store of value, and you think that the rarity of them, if you win, is going to cause you to have more money than the next person on that deal. And that's also been a type of investing, not business investing, but a type of speculative investing that has existed forever, whether it's gold or precious metals or tulips, and now with cryptocurrencies, we see the same thing, the same kind of thing. I think, and so that's how I view that world. I don't personally invest in a speculative way like that, but plenty of people who believe they've got a read on how to make money doing that do that. One of the things that I've thought about and heard kind of in the popular culture lately, and I've come to think about and think, yeah, I think this is true. And it's kind of a new revelation to me in terms about human nature, is that as humans, we like to speculate. It's actually, we like to, this is an activity we like to engage in. And so the fact that this would be incredibly popular, if you agree with me and you put crypto investing in that zone, the fact that it would be very popular, and with Super Bowl ads and all that is, I guess, not super surprising in that regard. But I would also liken this to what they said, what has been said about the gold rush era of speculation, that the real winners, the business winners, were not the gold miners, but those who were selling the shovels. And I think that, when you looked at Coinbase, if you ask me, do I think Coinbase is a good business or potentially good investment? I'll be clear that I haven't looked at it in detail, but I would say that Coinbase is selling shovels. So, regardless of my thought about crypto, Coinbase could, even if I wouldn't invest in crypto, if I were to investigate it and research it further, I would say Coinbase wouldn't be off the table as a business investment, because it's crypto industry, but they're selling shovels, not, it is kind of the thing with that. So those are all some random thoughts that came to my mind in reading this article, and I'll just lay that on the rest of you and see what you have to say.
Well, I think it's interesting because, yeah, I've seen this whole crypto thing turn into this big focus on crypto as an investment, and everybody's so excited about what it's going to do and whatnot. But it's like, it almost seems antithetical to what the original idea was. It wasn't to create this store of value that would grow over time that we could all invest in, or at least my take on it. It was to create another form of transacting that happened to also end up being tied to, its value in the marketplace, but it wasn't there to become the next thing that someone would hold to get rich on. It became that, but I don't think that was the original goal. It's supposed, especially when you look at, like you said, with Coinbase specifically, because they're trying to sell the service of making that more available. So while people are using them to perform the investment, it seems like what's really being advertised is the service of that marketplace. And, if you look at it from that perspective, I think it makes more sense that they would then want to run it out on the Super Bowl just to get as many eyes as they could on it. But yeah, I think that, everybody is just so focused on trying to predict its value that it became more about that than it became about the actual concept it was originally all about, which was getting away from fiat currency. And you hear that if you talk to people who are really into crypto, they don't tell you about how great it was for them transactionally. I've never had a person tell me about a great experience they had transacting with crypto that went better than they did with currency. Instead, they're only telling you about what the price did in the market in the last week. And I just feel like, I feel like that wasn't the original intent of those who were proponents of crypto. I think they wanted to really replace fiat currency. And yeah, so that's my thoughts.
Yeah, I think I would agree with you, Charlie, but I think what Ty said too about how it's human nature to be speculative and not even just that, but I think that's also human nature to like to win and to gamble. So it doesn't surprise me that the number two, most downloaded app or whatever had to do with gambling or, sport gambling, because I think that is what ends up happening is people are really excited, even the gold miners, of winning big, of getting that in, that value, getting there before somebody else and reaping in the riches of all that things that it can come. And I do think what's interesting to me about this article is that, if you think about it, most of the time people aren't watching commercials. I think the only time people are excited to watch commercials are during the Super Bowl. And so what a smart move it was to have that as a commercial to get attention. I hope what it does is not only get people to download the apps and all that kind of stuff, but to take that moment to research it and say, is this something that I should be interested in? What is this all about? What does this actually mean? And gain a little bit more deeper into what was actually being advertised, because I think a lot of people are trying to still understand and get their arms around how do you value it? What is it? What's the use of it? All this kind of stuff. What was the main purpose of it? Everyone's still trying to get their arms around it. So you're not going to get that from, a 2-minute, 3-minute ad. but hopefully it inspires you to, look a little bit more into it. But it's fascinating to me about how the excitement of it is, and the speculative nature, as well as the gambling nature and the winning, kind of thing, all roll into one, and during the Super Bowl. So it's very fitting.
Well, it's good to hear that I'm not unusual in thinking that this is interesting in any respect. So yeah, I'll pitch it over to you, Charlie, for our next article.
Sure. So I've got a pretty basic one from Accounting Today called 5 Organizational Best Practices All Accounting Firms Should Follow. Thought I'd just give a quick rundown of these and then get your guys' take on if these are the right ones to be thinking about, or if maybe there's something else that should be on the forefront of people who are running a firm's mind. So their first one they give is track proper documentation for all company expenses. Seems pretty basic. Second one is designate standard operating procedures for every accounting function. Third is cross-train staff to maintain efficiency in the event of a turnover. Fourth is role security is key. So that's like setting up tasks around the roles, not the individuals. And then finally, the fifth they give is back up your accounting software. So, from your perspective, are these the things to focus on, or is there maybe something else that firm operators should be thinking about?
Yeah, I thought they hit the right ones for the most part. I think that the backing up and making sure you have all the proper documentation and stored and have access to it, and cross training and all that kind of stuff, it should be something that everyone should do and have and think about, and that should be really critical. It makes me a little bit, pause a little bit when they talk about standardizing procedures, making sure that everything's exactly the same, because I think that what's unique about small, businesses that may be relying on some of these services, you can't always make things exactly the same. Yes, it might make it a little bit more proficient and easier and more effective, especially for the firm and the firm's employees. But I think that it can't always be applied with that, because you can't fit everybody in that box. And then it's like, what do you do when they don't fit into that box? Does it cause, the folks that are working on that account to spiral? I think that's kind of my only thought about that. It's like, you can't, when you do kind of a broad state, or, a broad stroke on that and say, this is what it should be and everyone needs to follow this, I get a little bit nervous about that from especially from a consumer perspective, from a client's perspective, to say, well, what if I don't fit in that box? What does that mean? But those are just my thoughts.
I think, Tammy, you hit something on the head that I wasn't sure, that I thought at first, but then I wasn't sure about after we got through the 5 things in terms of the context of the article. When they said organizational best practices, did they mean for accounting firms, or did they mean for businesses in general?
It does say all accounting firms.
Oh, okay. All right. Yeah. Because then that gives me a whole different perspective, in terms of, and Tammy's discussion about standardization, I agree 100% with. It's like, well, to me, I think that depends on what you're selling. I mean, if you're selling kind of a standardized service, and your whole business model is to do that faster and better and more efficiently, to bring expertise to bear at a lower cost, then standardization is absolutely key. But I think a quest for standardization is a little bit sideways if what you do is highly customized consulting for clients. So, but let's face it, the truth is the vast majority of accounting firms and small accounting firms don't do high-end customized consulting. They do very standardized compliance services that require a certain amount of expertise, but that are desired to be done efficiently and as low cost as possible. So I think that in the context of that makes some sense. The thing that I think is, I mean, if you go back to it, number one on the list, though, in terms of keeping your accounting firm organized, is to document your expenses.
Especially as advice to accountants, because remember, the premise here is this is the advice to accountants, so you would think they would know that. But yeah,
I feel like that's like table stakes, right? That's like, very like basic stuff. Like, yeah. So yeah, that's interesting. That's kind of what confused me. I was like, we're talking about organizational for accounting firms, and our first most important thing is make sure that you're properly documenting all your expenses. But maybe, they may be onto something there, right? In the sense that, accounting firms are the last to drink their own champagne, right? Maybe they're not up to par with what they would have their clients be doing.
Well, the
So,
thing I
yeah.
thought about that though, Ty, is that what they could be suggesting is to track your time and therefore your expense of, in terms of salary expense and people expense, because I think that could be what's happening if you're juggling multiple clients and you're not tracking your time appropriately. That should be number one focus. It's like document and track your expenses to each of the client that you're working on, so you know what their fees should be, what actually does it take to do their books and all that kind of stuff. So if you're not tracking it, that's where my mind went on that, because I was like,
Yeah.
well, because of how much, so that's kind of where I went.
Yeah. Yeah. So I would say that, my list is way different than this. So, yeah, I mean, at the top of my list, because we do sell very customized higher end consulting with our clients, at the top of my list is staying on top of what basically having a mental categorization of our team's capabilities. What can our team do? What can they not do? Because that's dynamic. We're dealing with people. We have a team of people that are constantly growing and changing. Those things are changing. What our people want to do is also constantly changing. So I would say at the top of my organizational list for an organization like ours is constantly keeping on top of what can our team actually deliver? What can they do? What kind of special talents and skills do we have today that we didn't have yesterday? What kind of special talents and skills have we lost? Did maybe we had some things, yesterday that we don't have today because people have left, or because our people's interests have just changed? That to me, like in terms of like staying organized, that's what staying organized means to me in terms of like, how do I keep that mental catalog of what we're really what's the value, what are the values, the value and the values that we are bringing to our clients, that our clients are paying us for? What's that library of values that we have at any one moment? Keeping that organized is like what's critical in my world.
Yeah, I think that makes total sense. And I also appreciate that working here, because I think it helps us to focus on the things that we want to be doing, like you said. And so, yeah, and that's part of the reason I want to bring this up, is because I do think it's very focused on people producing standardized work. And so I thought that we might have different perspectives on that. Do you have another article we can talk about, Tammy?
Yeah. So over the past couple of years, we have heard the struggles that many restaurants are facing with COVID restrictions, labor shortages, and rising prices in food. An article from CNBC discusses another issue facing some restaurants. Cameron Mitchell, CEO of a chain of 40 restaurants, states that unruly diners have cost his business $750,000 a year. How? Well, in security costs to protect managers and staff from the unruly diners. The article states that labor costs were up 13%, and the cost of goods also were up by 3.4%. The company expects to increase its prices to offset the cost, and hopes that with the trend of increasing sales and increasing the cost, that these things will help improve its margin. What I found really interesting about this article was that the title in the beginning of the article focused on investing in the security and the impact that it had on overall cost. But that was it. They didn't, mention how they invested in security. They didn't say if it was a short-term issue or if this was an issue that's going to impact the overall industry. So I'm not sure exactly what the angle of the story is here, but I thought I would discuss it with you guys to kind of come up what we think that the angle was meant to kind of drive to, and or is security an issue for restaurants these days?
Well, it seems like it was definitely meant to drive clicks. I feel like somebody wanted to put a big headline that said, people are acting crazy. Somebody spent almost $1 million trying to get customers to act right. So let's, make an article. I sat down, we're all nerds here on the accounting podcast. So I sat down and did the math. I said, okay, well, if we spent 750 grand across 40 restaurants, and then those 40 restaurants operate, let's say 40 hours a week, it's about $9 an hour per restaurant. So the headline put differently is, restaurants buy security at $9 an hour per location on a full-time basis. And when you put it that way, it's like, okay, if you're running a restaurant that presumably takes in a lot of people, you probably should have some level of security in some way. So I don't know that this is necessarily anything new, but I don't feel any more secure today when eating out than I have in the past. So if from that perspective, I don't think it's working. What do you think, Ty?
Well, I think just first for context for our listeners, I mean, that's a big number. So we're talking about like a company that owns multiple restaurants or something, right? That we're not, yeah. Okay. So it's not, it wouldn't just be one. And yeah, I think, I mean, it felt like kind of it was almost like you said, Tammy, like, it was like, well, here's the number, so just live with it. And so then the next point is, well, and maybe it's a point well taken. Like if you just accept that point, then really the angle is, well, how much margin do you have to produce as a business to cover that, right? Like if that's the cost and we just assume that is the cost, we just take that for granted, that's the cost, we're not going to dig into that, then we have to figure out, well, what do we have to do to generate enough revenue, and enough margin, right? Because, we take our revenue and then we subtract the cost of the cost of the materials and the service and all that. And, I guess maybe we have to wait more tables with fewer people or something. In order to pay for all that security, right? That's or maybe we could, if that's the point of the article is how, let's brainstorm on how to do this. Well, maybe we can combine it. Maybe it's like we disguise security operators as wait persons and hosts. We get them to do double duty, right? And maybe that's part of the trick to pay for this big security bill.
Yeah, I think those are all great points. And I wish that the article would have, really delve into that, because that was my question of when I first read it. I was like, oh, this is an interesting read. Like it's, we're going to have to, invest in security. And does that mean cameras, monitors? Does that mean, bodyguards? What does that actually mean in that sense? And then also like, do we see any, light at the end of the tunnel with that? Is it going to be, that's the way it's always going to be now? Or, are there other actions that can be taken place? Or how effective is that? Are they finding that with the security measures, are people, returning to the restaurant more? But having none of that, and then like what it kind of just made me what I walked away with was, hey, basically our costs are up, partly due to, labor increases, partly due to the, rise in food costs, and also security. We're going to raise our prices, keep on coming to our restaurants. And it's like, well, what was the point of the story? But I think that is a very interesting thing where it's like, another angle would really be if we're going to have to invest in security, which is a big number because restaurants just, so we're all clear, they run on usually thin margins to begin with. So having an additional cost that wasn't anticipated or, done before does impact a lot of things, whether or not they're going to have to raise prices or take even leaner margins. So it was a missed opportunity, I guess, to have a much bigger conversation than just the stats of their cost structure right now.
All right, everybody, that's going to do it for the None of Our Businesses YouTube show and podcast. Please tune in again next week for more business updates from an accountant's perspective, and also check out our sister podcast, Profitless on Purpose, where they're talking to anything and everything relating to the nonprofit space. Thanks for watching. Thanks for listening. Bye.
Bye.
Bye, everyone.